I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Futures are basically flat this morning after an Italian bond auction eased some fears. Then Bernanke returns for day 2 of his testimony before Congress, and Tim Cook is also on the stand today at Apple's shareholder meeting in California. Markets found some footing yesterday, tend to be sustained. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are improving a bit this morning. The market did recover from early weakness yesterday to post modest gains. So now everyone's wondering if it will hold.
I think at this point no one really knows if it's going to hold, but at least we have another point of reference. You know, the S&P high I think was around 1530 recently, about a week ago. So when you come into like 1490 or 1485, you know, it's pretty prudent to cover some shorts, look for a tactical long, and then measure the action moving forward to see if it could continue. But at this point, I don't think anyone's making big bets right here in either direction.
So let's take a closer look at the S&P and tell us what are the key levels you're watching.
Well, the key levels and the key trends we've been following have been changing a bit. So if you look at the chart here, you will see that traders have been following this ascending channel ever since the year started and ignited. We've been following the 8-day, the 21-day, then finally, if you remember, it was like last Wednesday, the market went into a market under pressure when we closed below the 8-day. From there, we had a quick 2-day move below the trend line into the 21-day, and tactically it made sense to cover a little bit there. Then you had to bounce back to retest this trend line, which failed with an engulfing potency. And then yesterday, we traded a little bit below the previous low, came back above it, and it was a nice little trade. Now the question is, can we get any follow through, and does this resistance hold? If 1504 to 1506 contains this bounce back and we turn lower, chances are we see the 50-day or even where that 1474 number was, and that might be a different spot.
Now, we talked about recently how you've been taking a more tactical approach. So how did that come into play yesterday? Well,
it was interesting because 2 days ago we had that huge down move. So yesterday the futures were up. So when the futures are up, typically when you have a big down move, you look for follow-on weakness. So I know a lot of traders on my floor, we're looking to short the spiders. So, if you shorted the spiders when they were up, close to 150, because that was a bounce back into Big Ben, then all of a sudden, it went down like $1, traded through the prior low. Good spot to cover. So with that said, then we traded back above that low, okay, which to me is that red dog reversal, which we're going to get into later. That was a good spot to be long, and then it went back up $1. So you had $1 down, $1 up. You didn't have to make the whole percentage in the middle, but that was decent tactical cash flow money, and you could have done that in a lot of different sectors, a lot of different stocks across the board.
Exactly, like the Homebuilders. Just as the financials showed us the way down recently, as we talked about in yesterday's morning call, Homebuilders helped show us the way up. Let's start with the XHB, which bounced almost 3% yesterday.
Right, and that's after getting pretty beat up. And what's important here is looking at 2 different trends. All right, you have to figure out where you are within the market in your time frame. The Homebuilders broke its accelerated uptrend a few days back, but then it held the more gradual, longer-term trend line. So if you're a macro investor, you might not have done anything as an intermediate trend trader. You could have made money in both different ways, or at least switched some gears. You look here at the Homebuilders, you will see here's the start of the year. Here is this accelerated trend line that broke right here. So the intermediate guy probably get out of the way. This is where I would have been selling if I was long. And some guys probably made some money short here, right? Nice clean move to the downside, small bounce back, and then boom, came right back in. And now it's trying to hover and hold this longer term trend line. So I would say this could give us clues to whether or not the market could sustain itself, because if we could hold above this recent low of like 2680, 27 above this trend line, I do think maybe we could resume, but if we start breaking below this, that'll give us clues that the low that was put in yesterday probably doesn't stick.
Well, Pulte Group was the biggest winner of the group on yesterday's bounce. It gained 5.6%. So if we take a look at the chart, what would you say are its next resistance levels?
Okay, so here this one also held its longer term trend line. You go look at it here. This is the trend line that's been intact for a long time. Came right in, held it. This is also where it broke out from. So some dip buyers perhaps look to buy it there. And now in order for it to get better, I would say it has to reclaim the 8 and the 21 day, which is in 1944. So overall, decent little snapback, but I don't think it's anything worth putting too much, I would say, pressure on or too much attention in. But again, this 18 should hold. If this gives way, you could see pressure in the home builders, which then will give us clues that the stock market has more corrective activity in front of it. Well,
let's also look at DR Horton, which saw a nice gain of over 4% after bouncing off its 50-day. Could continuation be in store today?
I'm not even getting to the chart. It's the same looking chart as the last one, and same story here.
Now, what about Lennar? Advanced almost 4%.
Well, Lennar, let's get into the chart. You take a look here. This one was trying to show some leadership earlier in the year, and here was your breakdown. It broke down right below this. What was this? 39.29, and now this too is holding a different type of trend line. So it'll be interesting to see if this is the new pivot low. And then, but you have a lot of resistance. A lot of these things will have overhead resistance, so it's going to be key if it could reclaim the resistance or get rejected by it. But the somewhat easy bounce, so to speak, could be back up to 39.45.
While not necessarily a home builder, tied to the sector is Home Depot, which reported better than expected earnings yesterday that outshined competitor Lowe's. The stock gained 5.5%, reclaimed all key moving averages. So now that it's back at highs, what's your strategy?
So now this one looks different. It's above all the moving averages. It's near new highs. This stock was my retail-focused macro investment stock of like 2 years ago, and the trend has continued. So it shows you if you have a longer-term time frame, sometimes these intermediate trends might be a little noisy for you, so you have to figure that out. You look at the chart here, though, the chart looks really nice. Chart, held support like some of these I just showed you, bounced off it, and then closed near historic highs. Now, I will say there is, some lack of momentum in this market, so I wouldn't be chasing a breakout here, but I would say if we could hold above this area, the top third of this range, I think traders will be looking for a breakout move above 68. And if we can get a real breakout above 68 in time, that could show us that the market is a bit healthier than some of the bears would like.
Well, coming up, we're going to be talking about indices and stocks that exhibited red dog reversals yesterday. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We get lots of questions from people about red dog reversals, how to spot them, how to use them. Let's look at indices and stocks now that exhibited red dog reversals yesterday and what we can learn from that. Let's start with the XLE, which also did.
A lot of people do ask me about that tactic because for me it's one of my favorite ones, not because it's named after myself, but it's a calculated way to create or to trade a counter trend trade. Now sometimes the red dog reversal leads to a big inflection point in very oversold markets after a prolonged correction. Sometimes it just gives you a way to enter a trade with the plan to make some cash flow tactically. So the first one was XLE. If you look at the chart here of the XLE, you will see it put a high in here at around 79.51. From there, it's corrected pretty hard. Okay, so guys looking for some type of reversal pattern into the 50-day could have said, okay, when it broke this area, which was 75.88, that's what I would have put on my price point sheet as a pivot. Sometimes you see a buy and a sell at the same point because that shows you that it's in an area where this could be for action. So maybe it was quick little short, but a better long. Once it went below 75.88 and put it in the low of 75.46 and came back above it, that is your buy price right there. So you put your stop into the low of the day, rallied nicely into the close. You had a 40-cent stop loss for something that wound up going, almost $1. So nice risk reward. And if you hold it for a day and a half, because tactically, typically that's what you do for a red dog reversal during tactical times, you sell it into the 77.30, and that was a way to buy an area, because sometimes if you think it trades through the low and just keeps going, you don't want to catch that falling knife. So you want to wait for it to reverse back above, then use the low as a stop. So tactically, it's well defined, and you'll see it in a few other areas as well.
Yes, we saw another red dog reversal in the XLF. So how could we have spotted this?
Okay, the same type of scenario. If you got out of it when it broke the ascending channel, when it broke the 8-day, you have the luxury of tactically trying to trade it or even getting involved for a swing, but I'm not still sure if those swings will present themselves. So if you go look at the chart of the XLF, here's your ascending channel to the upside. So if you sold somewhere around 1780 when it closed below the 8-day, and stayed out of the way, coming all the way into the 50-day, again, it was worth looking. And if you remember yesterday, you had some short-term weakness in the financials, so it traded below the low here, which was 17.25, okay? And then when yesterday the low was 17.16, so once it went back above, you could have put your stop for 9 cents, okay? It's not a lot, but it's a very liquid in the XLF. So once it came back above, you could have bought here, and then it closed at 17.35 as a nice tactical trade. If you didn't want to take anything overnight, you sold it there. If you wanted to do a day-on type of strategy and see if it tests the 8 and the 21 again, here's your day-and-a-half tactical trade. And sometimes it lasts and continues, but I'm not sure if it will in this environment.
Well, we also saw a red dog reversal in stocks like Expedia, which was trading on a downtrend for the last 2 weeks and put in a red dog reversal at the $62 level. It closed at highs, so what level does it need to hold to be constructive? Well,
what's good is it happens in stocks too. In stocks, there's more bang for the buck, so to speak, because they move and there's bigger vol. So if you look here at Expedia, which is something that definitely moves around and you want to have a plan with, you go and look at the chart. This has been somewhat out of favor or out of just play as it's been grinding lower. So here it was, again, same type of strategy from 68 all the way down to almost 62, $6 worth of corrective activity. It traded through the low here of 62. The low wound up being 61.49 yesterday. So once it came back above, you bought it at the previous day's low. You put your stop in here about 50 cents. Okay, and it wound up going to 62.82. So you made 80 cents. And if you held it into today's move, and if it's up a little bit, that's your day-and-a-half trade. Some will say, okay, I'm going to buy it, and I will not sell my Expedia now because I have a great price. It just pulled in, $8 or $6, and I think at some point it's going to take out these highs. So if you want to hold it as a swing trade, considering that it, kind of held this trend line going sideways, you do so. You could do it in many different ways, but it's the same type of strategy, in an ETF or any given sector.
It also happened in AIG yesterday. Where could we have seen this one?
All right, with different sector, different type of stock. You look at the chart, but the pattern remains the same. You go here to AIG, you'll see this was the top here on AIG at an outside day. So if you got out of your AIG here and then never reclaimed it, you might have been able to say, I'm going to look for another entry into the 50-day. So here was a little bit different. You even had a more defined 2-day support. So once it broke below this 36.82, put a low in here at 36.68. Really, what is this, 15 cents? And then it closed up pretty strong right into the moving averages. So here is your 15-cent stop into the 50-day, and if you held it for the whole day, you made money. If you sold it at the close, okay. If you held it for a continuation, perhaps you just caught a nice stock into support and you did it with a plan.
It really did happen across over in retail. It also happened in cores.
Yep, and this one is very volatile. So with that being said, when it announced its secondary, it got weaker and it wanted to fill in the earnings gap. So those who got out on the secondary news said, oh, how do I get back into cores? You look at the chart here and you will see with cores, here was the upside earnings. Looked like it was going to be really good to the breakout, and then all of a sudden they had a secondary and some insiders wanted out, which always creates weakness. Filled the gap. So if you weren't involved here at 64-ish, or you even got stopped out here at 62, down at 58, you might have said, oh, I want to look for a reversal pattern. So yesterday's low, 57.85, or 2 days ago, I'm sorry, and then yesterday was 57. So once it reclaimed 57.85, the prior day low, your stop would have been about 80 cents lower, and then it closed pretty strong. So what was this low? This low is 57.85, so about $1.50. And now maybe you caught the bottom in cores. So if you're an active trader, maybe you sold the close. If you're a swing trader, you're holding it. And if it clears this little pivot, perhaps you're going to even get more profits if you want to just use your stop as that exit.
And finally, even Facebook put in a red dog reversal yesterday. Walk us through that one.
This one wasn't as drastic, and this one's been under a lot of pressure since earnings, and I know that, sold it into earnings because I don't hold it there, and then it became choppy, and then it's been under pressure, just, slow stepping down. And then finally, for those who are out of it, because I've been out of it for a while, I've been looking for some type of reversal pattern. This one wasn't blaring, but if you look here, similar setup where the stock was as high as 32-ish, okay? So with that said, if you did sell before earnings and you didn't get back involved, you said, okay, I want to wait for a reversal pattern. Well, here it was on a slight basis. Traded below the recent low here of 26.80. The low yesterday was 26.70, so that's only 12 cents. Reversed to closing the high, so now you could be long versus slow. Okay, and if it happens to take out this 3-day pivot and the catch, reclaims this moving average, maybe it can come back up and test this area. But again, it's got a lot to prove, but if you're looking for an entry, here's a calculated entry with a plan, and it is above this recent pivot and it is above this pivot, and I do still think that the highs of the year are not in on Facebook.
All right, let's do some quick hits here. Apple rallied 1.5% yesterday on rumors of a potential stock split. The company's annual shareholder meeting is today. All eyes will be on Apple.
Yes, I feel like every day people are trading at less, but still your eyes are on there because when it moves, it's somewhat exciting. And unfortunately, stock hasn't moved, for more than a day or a day and a half to the long side for a while. I think we had like 2 or 3 different times when you could have been in for a few days. So if you look at this trends, into our trend line, there are 2 of them. Here's a huge one. This is 700. This is when it broke the 21-day. This is when it broke the 50-day. And here's your trend line coming all the way down where it's been containing this stock. Rejected here, rejected there. Now you have a smaller descending channel within this chart, which I'm looking at to see if there's any kind of action here. So with that said, let's take a close look right here so you can see it. Here is actually a small little red dog reversal. Yesterday that price was 442.57. So if you got back involved there, that was your spot. Okay, here is big macro support coming into 435. If it starts to get above 455 today with some authority, with some volume, I would say that you could go with this, and then here's your macro trend. Okay, the bottom line is here though, it's definitely still wishy-washy. A lot of people want to hear what they're going to do with their cash at 12 o'clock today. And a buyback, and I've been talking about a stock split for a while in this stock, and typically you don't do a stock split when you're 30 or 35% off the highs, but I think that the investor base is saturated in these levels and nobody wants to hear about the low PE or whatnot. It's more psychological. So if they were to do just say a 3 or 5 to 1 stock split, announce a buyback, and even increase their dividend, this stock will start acting a lot better. And I think that would be a lot better for traders. It would be very welcomed. And at this point, there are a lot of things I would like in this world. So I'm not going to put my opinion there. So if it doesn't act well today and it breaks that 442, I'll probably just avoid it again.
All right, Hewlett-Packard driving higher yesterday with a 4% gain. Now back above all key moving averages. So above what level could we see it make a move higher?
I think at this point, if you're not in Hewlett-Packard, you're late to the party. And if you are in it and you were in there for earnings, you know what? Congratulations. You stayed with one of these mega caps that got reborn. It was one of the dogs of the Dow coming into the end of the year. So Hewlett-Packard is one of those. You take a quick look at the chart, see where it was, where it came from. It's had a really nice move. Here's your gap up after earnings, and it's continuing. I guess if you want to look at it on a macro, if you are holding it, I don't see there's no, maybe it can get to 21 to 22 before it sees its next big resistance, but it'll probably take some time.
And the GLD saw its biggest gain since January on Bernanke's comments that the Fed will keep interest rates low. It reclaimed the 8-day on the way up. So where's next resistance?
Well, I think it needs to prove that it was just more than an oversold bounce. It broke its intermediate trend, but it held its macro support. If you go to the chart of the GLD, you will see that here is that intermediate wedge. Remember we were talking about that, wound up resolving to the downside, but overall it held longer term support, didn't even touch it. And then here's your little bounce. Today it's acting a little weaker. Okay, so the question is, I would say, in order for some commitment to stay with the GLD and some people to think it's more than just a 3-day bounce, it's got to hold above like this 154, 154 half. If it could hold above this level and hold a little bit higher, there's a small chance that it could take out yesterday's high, fill this gap, and continue. But if it doesn't hold this area, it was just a bounce.
And LinkedIn rallying in later in the day yesterday, basing at highs. Does it still have more room to run for now?
What's funny is, as much as I love this stock, you try to be cute sometimes. Yesterday I tried shorting it and I lost money, thinking that, if the market's going to correct, they even come after some leaders. You saw Google lose 800. You saw Netflix get a little bit wishy-washy, but overall, this LinkedIn's held very firm, and it was actually upgraded today, so maybe somebody knew something. Overall, this continues to be best in breed, holding the 8-day, continuing in this upper flag type pattern. And I guess now if it starts taking out and closes above 161, you're going to see new historic highs here. If you're still invested in this stock and you're long, congratulations. Hopefully this stock learns from some of the predecessors that as it continues higher, maybe it does announce a split so it doesn't become a target and a blimp like a lot of the stocks that create higher prices.
Well, we do have more from Big Ben today. We have Apple shareholder meeting. Where's your focus heading into trading today?
My focus is if we continue yesterday's bounce, what resistance could contain it? That if you went long yesterday into the reversal, you sell some into some strength and then you figure it out and not just try and short too early. But if we start to stall at just say 1504 to 1506 in the SPX, take your long off, and some people might try and test shorts there. 1511 to me is the line in the sand. If the bears want to stay in any kind of short-term intermediate control, they don't let the bulls reclaim that area. And again, my attention will be a little bit on Apple. I'm not going to be taking a spin class today, or I might be going to the gym late at 1 o'clock or something, because I want to listen. I want to see what he has to say. Hopefully he says something different, and hopefully that's helpful to the market. But as we saw also in the call, tactically you could still make money with the red dog reversal. Macro-wise, you could still hold stocks like a Home Depot that's near highs, or even Target looking better, even Walmart. So there are things as a macro investor you don't have to run for the hills with. But as an intermediate term trader, you're better off switching gears and trading around positions, if that's where you want to live in your trading realm.
All right, and that's your morning call for this Wednesday. Happy trading, everyone. Have a great day.